The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting hour of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White, as we start the show off on a Friday on options expiration. 2.75 billion shares on the New York Consolidated Tape, and 1.345 on the NASDAQ. The S&P up 20 points at 1882, hit a high of 1898. I'm going to call that a win for my prediction, a rounding error, but we'll talk about that in a minute. The NASDAQ up to a high of 42.96, printing off 42.52 now. And we'll talk a little bit about why that is working the way it is, but it can happen. Anyway, you can always give me a call at 877-927-6648, and I have a few things to talk about, but we shall look forward to your phone calls because I don't have a lot planned after the first few minutes. So if you want to call in, go right ahead today and give me a high five over the phone. Anyway, on this day in 1973, the Organization of Petroleum Exporting Countries, OPEC, implements what it calls oil diplomacy. I can't even speak today. Oil diplomacy. On this day in 1973, it prohibits any nation that has supported Israel in its Yom Kippur war with Egypt, Syria, and Jordan from buying any of the oil it sells. And, of course, if you compared it to the prices a year before, I think, within a few weeks from now in 1973, oil was up some 400% in a matter of months. What a move, boy. Can you think about trading crude at $5 or $4 or something and watching it go to 14 back then? I imagine maybe, I bet Andy was around there. Maybe he'll call in today and tell us about it if he does remember it. So we have a great deal of what's going on out here. And, of course, we've been talking the last 2 days that I thought we were getting the kind of gift that you rarely get. In fact, in my newsletter, I said it was basically a 1 in 50 chance that we didn't get to 1900. And again, we didn't get there, but I'm going to say 2 points is there. And what happens in the marketplace when you do come into options expiration like this? And it is greatly moved by option market makers. And they still have a lot of sway in this market. I think a great deal of what happened today is exactly what was going on, and it is interesting. But we'll get into it totally. What else do we have? Anyway, for all those that were listening on Wednesday and yesterday, I said start buying out of the money calls when we were down, I think right after the start of the 2 o'clock show. In the daily newsletter, The Path of Least Resistance, which I have, and you can always check out on the front page of TFNN under newsletters, under David White. You can see mine there. But what we did was start buying options for expiration today. On Wednesday, we bought ones for the IWM, and I think, I don't have it in front of me, but I think they were 65 or 60 cents, something like that, or better. Told my customers to go ahead and buy those. Told them to buy the SPYs and buy the 106s. Oh, we bought the 106s, on the IWM at 60 cents. We bought the SPYs, the 186s, and bought those, I think I said less than $1, but I think they were printing around 80 cents by then, but I thought you could be safe all the way up to $1. And yesterday we actually bought an ETF, which is the XIV, which is the bearish bet on the VIX. And I had looked for a few targets. I'm not going to do it again because I'm going to do it in the 4 o'clock hour with Tom O'Brien. But we showed both the IWM went to confluence within, what, 10 or 15 cents. Basically did a pretty perfect Gartley pattern. And since we'd been going through the weeks before of all these small tech and small cap companies that continued to hit lows on lighter volume but continue to blow through those lows, I figured there was probably a pretty significant bounce coming out of at least the IWM. Since the IWM has been leading this market for a while, I figured that it was leading the SPYs. But I wanted to talk about playing white lightning, which is getting in the last few days of expiration. Tom calls it that. I'm not exactly sure why. Maybe that's because you feel like you've been hit by white lightning. But certainly it is a problem because several things arise. Normally, like this morning, you get a bounce. I wrote in my newsletter that if you're not getting the kind of price for your option that you think you should get, i.e., I think the IWMs opened up about 109. We had 106s. They should be worth $3, right? Well, a lot of times they'll open them up. They won't let any of the puts go through. They'll see all the orders show up for $3, and pretty soon it's $18.50, or not $18.50. It's 108.50, excuse me. And you go, darn it, why do those guys, I actually say something else, but I will tone it down here for a mixed company. Anyway, I'll say, darn it, what happened? And for a lot of times, I never figured out what was going on. There are a few ways to get around these obnoxious market makers that are not willing to pay up as they should and give me my ill-gotten gains. You can force execution, which means you call up your broker and say, hey, fire those options off. I have the right but not the obligation to buy, and I am making them cough up now. You can do another thing that normally works fairly well that's a little less drastic, and that is you can take the opposite side of that trade on a day like this and wait for the premium to come back in, because normally after things settle down it will. I actually did that on the IWM, which was, I think it went to 109.18, and I think I fired off a short and got it at 109 and 5 cents or 118.99 something like that. And it really didn't do much after that. But at any time, then I can, on my leisure, go back and work out of those options. I had a friend, his name is Ted Cruiser, who is a savant when it comes to options, and we used to trade together for a long time when I was in a chat room in a world far away. But old Ted, he was the king of this. He would take some of my trades like I did like these, and he would just sit there and trade in and out and against those options all day long, and then still take the money at the end of the day. So he'd be long, he'd be short, but he always had an option on the opposite side to handle the risk of an expiration day move. But we played a bunch of them, especially gold stocks back in 2004, 5, 6. A lot of those were great plays for expiration days. I know Tom, before I really became active, was sending kids to school with OEX options. We'll probably talk about that tonight. But I think that's where it came from, playing white lightning, because your fingers are white. They're on the corners of the desk. Everything's white. You've got a death grip on everything because it's in a minute you can either make a ton of money or lose a bunch. But what I'm saying is there's a variety of ways to get around options expiration. And it is a issue, especially on a day like this, where you're going to see option market makers stand away to make sure that you don't get the full value of your option. I only had to do it on the IWM. But basically, we bought the IWM 106 puts when it was at 104, maybe a little bit below, for 60 cents. We sold them out for around $3 today. And what's the IWM at now? Let's take a look here. 107.25. So pretty happy that we sold them out this morning. And of course, we bought the XIV at $25 and sold it out at $29 this morning. And I had the SPYs also. We bought the 186s and bought them for, like I said before, $1 earlier. And I think probably most people ended up getting about $2.50 out of those, and maybe they were in it for 75 cents. Now, since then, of course, the SPYs went up a great deal. Probably the one trade I exited just a little earlier, but I did not like the way that the IWM was starting off the day, and it had already hit my target. The XIV had already hit my target. I figured that the SPYs was probably going to roll over fairly quick too, although I did think it was going to get awful close to 1900 today, and 2 points is going to be, I'm going to call that actually very close. But remember, there are ways around this, especially on options expiration day, and you can force execution if you want to and get the unit, and you're going to stick it to somebody. And, of course, the option market maker should have been giving you a good price, at least the price that they were worth at the moment when quoted. But many times they won't, and there are ways around it. So just always think about that in the future if you are not getting a good price. Again, you can give me a call at 877-927-6648, and I look forward to your calls. We talked about options, and I bring it up just one more time, and that is they for reducing risk, not taking more on. A lot of people that maybe took my trades or listened to me on Wednesday are going to get feverishly brave the next time and lose all their cash. Remember, you want to use options for reducing risk, not taking more on, and you know, when they do them right, and there's maybe 2 times a year where you're going to be in a position that we saw this week. That is a major move in the stock market. You go and look at the options. The option market makers aren't blinking. What that means is they intend to move the market back up. They're going to sell all the puts in the world down at the bottom with a huge VIX. And guess what? By the end of the day, they are whole and making a lot of cash also. So what could have been a rout for option market makers actually probably ended up being a rather decent move for option makers this week, and could have been a disaster. But they are pretty good at moving the market down far below what it should be, blowing out a lot of puts and at enormous values, only to see the market pretty much repair most of the damage by Friday. And we'll talk more about this when we come back. Please give me a call or post a message in the den if you can't at 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And had somebody IM me that I guess didn't understand. What will happen is they'll get the S&P up to like they did at 1998 today, and they continue to sell puts and or calls, but make sure that the market moves slow enough that they can suck that premium out and keep it all. And of course, most of the puts they probably sold over the last couple of days, and probably all they need to do is make sure that that the market holds up just enough into the close that they can keep it going. But they rang the bell today. And that is part of option expiration. I'm showing 1880 on the S&P cash now. So up 18 points, not bad, 2.9 billion shares. But it's all just part, they don't need a lot of time. Option decay, especially on a Friday like this, they can yank it out pretty much by noon. And one of the reasons why I tried to get out of as many of my positions before noon is not an uncommon thing to see. Now, are they going to close this thing at 1890? 1885? That's probably all they need to do to keep their cash. So just remember that the options that they sold in the last couple of days and pushed out at the lows are all going to be 100% profits for them as they expire worthless on the close at 4 o'clock today. Anyway, as we look forward to next week, I've had a lot of people asking me and emailing me what the market's going to do. I think for the most part, you're going to have some wicked chop. And unless you are incredibly good at intraday trading and probably using a 5-minute chart, I suspect the early part of next week is going to be some of the most wickedest chop that we've seen in this year. Trying to catch a trend may be incredibly hard. I'm going to stand back and see how the market digests what we've been through in the last 3 weeks. I continue to think that we could see a market that slowly moves higher on the idea that the Fed is now going to back off of higher interest rates next year. And we could see this, they kind of hold this up until Christmas? I think the answer is yes. One of the problems, again, I brought it up yesterday, is how many people get short a market like this, and then when it bounces, they reshort it and reshort it and reshort it. Like I said, also this week, the market's only going down about 25% of the time. It just happens to go to hell in a handbasket quickly. The problem is you need to wait until these shorts, once again, get either shot out of the market on big moves like we've seen over the last couple of days on the upside, but I don't think that's enough. We may have to get back up to 1920 or 1935 before these guys get out. I could see us going into, let's say, Thanksgiving at that level, and maybe sales being a little bit better than people thought, and the market really doesn't need to go up much. It just needs to hold steady and slowly squeeze those folks out of the marketplace. And that's pretty much it. So as we look, we could have a market that is range-bound all the way into Christmas, possibly. Of course, you know, we could have the Night of the Living Dead and, The Walking Dead with Ebola in any moment. Of course, we also have a new Ebola czar. Unfortunately, if you thought you were going to feel better, you're probably going to feel worse. He's a horrible political hack that was the bag man for distributing lots of cash that was supposed to go to shovel-ready jobs. And, of course, we found out only about 20% went to shovel-ready jobs. Oh, there weren't any shovel-ready jobs. All the other stuff, when politicians lie to us ad nauseum, which they always do. Anyway, this guy's a horrible hack. You know, just when you think you can't be any more disappointed by the people that lead you, they come out and throw some more gas on it. So what can you say? Now, next week we're going to go into some earnings, and it's going to be interesting. On Monday morning, we've got Beeve Aerospace, Genuine Parts Company, Halliburton, Peabody Energy, and PetSmed Express after the bell, Baxis, Apple, which is going to be the big one, CMG, Flowserve, Illumina, and IBM. So we're going to have a lot of moving pieces in there. And like I said, it's going to be, everybody's gotten real short. These companies are going to be real. I imagine a lot of people are going to be shorting them, thinking that they're going to get the next Netflix out of this. And just like we saw at the highs with companies like GoPro and some of these others, at the lows, being able to blow out Netflix $100 or $120 down is also a good sign that maybe you've hit a short-term low. And in fact, I really like the way that the market acted if you think a short squeeze is in effect with the news of Netflix yesterday. We will be back in a minute. Please give me a call.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, it is an interesting day, and we'll keep an eye on this, but for those fans of the art of timing the trade charts, would want you to start looking. We talked about over the last couple of days just how great the confluence level worked for us in the IWM. And as we look at some of these other charts, especially the way that some of these small caps worked, if you're thinking about shorting again, look at that confluence level. If you're thinking about making some plays long, how far could we bounce back up? I think a great deal of these stocks could bounce back up to the confluence levels. If you're new to TFNN, you can always go to the website, check out the Art of Timing the Trade Charts software. I've got videos on there, and most of the videos just kind of easily show you what these things are. But in the case right now, it's the 618 of one move to the 382 of the other, of one Fibonacci move to another. And in this case, I guess it's kind of pinkish. I don't know, I'm about half colorblind. But right now we're showing the AMC Networks chart, and just over $60 to about $62.50 is a nice pink area. Probably pretty good indication that even though you tested lower lows, that you're going to have a pretty much automatic rally or a big one. In this case, we were pointing this out the other day, so I wanted to bring it up. But that certainly is the May 8th low at $53.99, 6.5 million shares. Now, this one was probably a pretty good bet if you wanted to go out and buy 55 calls on this one. I was telling everybody you want to buy out of the money calls. You know, this thing was down here at the lows. Well, I probably wouldn't have been able to do it. Well, it was a little under 55. But you want to be able to, like, if you want to duplicate what I did this week, you want to be looking for stocks that are way under with a lower price and underneath this move out here. And this is a good example of it. But you also want to be looking for what the maximum out of this is going to be. And that is, in this case, probably going to be just above that 60 mark. And always good to sell when you can, not when you have to. Which brings up something that I brought up in the news, the Tiger's Den today. And I think I was in there watching what was going on, and I think it was just about 11 o'clock. Basically, a lot of people in there. And I said, well, I'm done covering, basically selling all my put positions and raking in my cash by 11. And I said, everybody else can fight over the last 10 points. And I think the S&P was at 1890 at that point, and it was headed up to 1898. But I would rather sell when I can than when I have to on the way back down. And so I was more than willing to leave just a little taste on the opposite side of those trades so that I could get out on the move up instead of wait on the move down. Now, like I said yesterday, we were looking at Netflix, NFLX. And when we look at this, we've got apparently somebody in the den said that Mark Cuban's out saying to buy it. But, you know, probably stocks just don't go all the way up and don't go all the way down. Netflix, of course, facing new competitors and also rising content costs. My guess is that the deal with HBO, since I talked about it 3 weeks ago on the Tom O'Brien show in my Tech Insider thing, that wasn't new news to the market. So yesterday, I think, basically all had to do with the rising cost of content. One of the things, if you are a Netflix user, is I'm finding fewer and fewer and fewer things to watch. They had been basically buying things and letting them sit on their streaming service for months, if not years, and writing them off over about 3 years. I think they got a bunch of guff for it, and now they're starting to write stuff off sooner. And you see a lot of stuff rotate. It'll only be on there for 60, 90 days, and then it's gone. And I think when they're doing that, it probably is going to cost them less overall, but it is starting to move the content costs up front. Also, when they started looking at what they're paying to actually produce some of these shows, like House of Cards and Orange is the New Black, and the other ones that they have on the site. I watched, I think, the first season of House of Cards. For some reason, I got out of it. Never watched Orange is the New Black. I really like watching their documentaries. In fact, watched one last night. I wish they'd get some new ones. I'm down to almost watching nothing on Netflix, and maybe some other people. Now, they said in their earnings call that they were seeing problems with charging $1 more for new subscribers. But to me, I looked through the data last night. I just didn't see it. I think it's that content cost, which is what everybody's looking at, along with the fact that anybody can do what Netflix does. There was one thing that they do that I wrote about in the Tech Insider a few weeks ago that no one else is doing, but my guess is they're going to start doing that too. By the way, you should have seen the tech in, yeah, they don't refresh their content very much. Oda in the Den is saying that. Yes, someone wants to know if they can call about printers, and certainly if you want to call about a printer, you certainly can. I don't about an all-in-one printer, which I don't recommend, by the way. Anyway, they can call to okay. Netflix was one of them. Let's take a look at some of these other ones out here while we were waiting for a call from Atlanta. Now, here's another good example. American Realty Capital Properties, ARCP. This is another wonderful example, a beautiful example of confluence. So if you want to see how these things work, this is great. Now, you get a low out here on June 12th at $11.76, 31 million shares. You get into it with 15 million shares. It bounces right back. This would have been another excellent candidate if it had options out here. And you can probably see what this thing is doing, but you have a beautiful, beautiful 10-cent wide confluence range from the March 4th high. And if you use the other move, which is the high of September 3rd, back to this low out here at October 15th, you've got absolutely everything that you're looking for out here. Look at this one. This is going to be a good example. What is it, 1270? It's going to be right around that level. Keep an eye on ARCP and how that works. I also said that even the dogs were bouncing, and there was also kind of a mild confluence level on BlackBerry, but not one that I would like or trade off of. But I certainly did like the fact that this thing came back into that Wednesday low. It was one of the ones I was watching for, and it is... Do I have a phone call? You're not in the den. You're either typing in the wrong room again. So anyway, I've got a phone call. I'm assuming it's from Atlanta since he didn't type to TFNN. How you doing?
Hey, Dave.
This Danny?
This is Danny in Atlanta. Congratulations on your call Wednesday. I was worried about you yesterday when you started taunting the trading gods, but it worked out for you.
I cursed him, shake my fist at it. But I was watching the options all the way into the close, and the option markers didn't blink. And that told me, in fact, somebody else in the den said something to me, and I said, I'm going to wait until 3:30, and then I'll make my decision then. And at 3:30, they still hadn't moved. So as far as I could tell, 1900 was still on the table for them, or close to it. I certainly thought that the bias was going to be there. I didn't think the market was going to go down at all, so I thought I at least had overnight to get at least a partial bounce.
Well, that was a great call. Hey, I need to buy a printer and would like to know what you recommend.
Laser printer? Laser printer or what?
I don't think I need a laser printer. But you think it's worth spending the extra money?
I tell you what, I bought a laser printer, and you can buy them now for $50 or $100. You want color or black and white?
I think I need color.
Okay. You can look around for, it is a, you can find, I bought my 2605DN from HP on sale, I think, a couple of years ago for $180. I don't know what your budget is on buying something.
I could spend $200.
I would look around for some cheap HPs. I bought mine several years ago. Now they come, normally these laser printers are loss leaders, and what they'll do is they'll give you a toner cartridge with about half full, or maybe 3/8 full, right? So you have to go buy their very expensive toner cartridges. Of course, you can buy third-party toner cartridges also, but I don't print that much, and so like every 2 years or something, I have to go out and buy the toner cartridges. But I had a inkjet before, and I was doing nothing but throwing away inkjet cartridges that were full because they dry up. I'd still use them, but to me, the bigger value was being able to know that I could not use my laser printer for 3 months, come back, and it would still work. And two, it really didn't cost me any money. The toner cartridges really don't go bad over time like the inkjets do. But
that's a good point, because I don't use it that much either.
HP has a I'm sure they have a model, just like everybody, where they know that they can get the most out of their consumables by letting them go bad. The other thing is that they have a date code in the inkjets, and I got tired of my things being out of date, and they wouldn't let them be used either. I don't know if they're still doing it, but that had me curse the day I bought a inkjet printer, because I was buying cartridges that almost were the price of a third-party laser toner cartridge. Plus the fact that I liked, when I did want to print something, it looked just like a laser printer in color. So I've got a 2605DN, which I love beautifully. And then you can buy, if you need a scanner, you can buy one for $50 or something. There's not much different in those. And I don't like multifunction ones. And especially I don't like multifunction inkjets. So, because normally what will happen is either the printer busts or the scanner busts, and then you're out both. Because the software tends to throw up and won't work if one of the sides of the device aren't working. But they have I've seen the min time before failure rates on the all-in-ones, and they happen to be about 4 times what the individual units are. So not only do you lose both sides, you have a much higher rate of them breaking. So I'm not a big fan of the multifunction ones.
Well, I'm glad you told me that, because I was going to buy inkjet multifunctional, and I won't.
This is the worst of all words. Just put a beat me sign or kick me sign on the back. But I dislike inkjets for that reason. I think you're better off, if you don't use it a lot, to go ahead and bite the bullet. And if you just want black and white, you can buy like Sanyo and Samsung laser printers for $70 that are just black and white. And so now they don't print a lot, but again, I probably print maybe 15 pages a month. And to me, I was always throwing away $25, $35 inkjet cartridges, and the third-party inkjet cartridges do not work very well. I had very bad luck with them. So not only I got beat up on every side on my inkjet experience and tried to stay away from them.
Okay, and like you said, the HP is your first choice.
I don't think that there's a better one than that. I don't know if it's still available, but in that range, it took envelopes and regular 8.5 by 11, prints on all kinds of paper, and seemed to be rock solid for me. I think I bought it. But they may have a less expensive version of that now. But if you just look up 2605DN, I think we have 2 of them here in the office. I've got one at home. They seem to be the bulletproof ones, and you may even find one used somewhere. Okay,
great. Thanks for the information, and once again, great call in the last 2 days.
Well, thank you very much for your call.
Thanks.
Anyway, we were talking about BlackBerry. Again, you can call me at 877-927-6648. But another reason I took the trade, when I looked at the IWM, I started looking at the worst stocks out there, the living dead stocks. And, you know, when we looked at BlackBerry out here, this thing bounced up with 72 million shares, and it was back into it with 12 and 9 and 6. It was telling me that this market was ready to bounce. I think we've got to generate some more energy, and we're going to come down here and blow these out. It may be after the first of the year. We'll be back and look at a few more stocks before the end of the wonderful show.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come out, we're going to look at a couple other charts before the end of the day. What can we look at here? And that certainly is Beazer Homes. Kind of mixed news on housing today. Certainly did shoot up over 18. Still needs to come back and test this low at $15.27. So I don't think that the old chestnut that it's a market of stocks, not a stock market, rings any truer than now. In that you want to be in specific stocks, and probably it's going to be much harder to make money in the indexes going forward, at least I think in the next week. But a lot of these, again, are the same patterns that we talked about before the market broke. If you go back about a month or 6 weeks, I talked about that asymmetrical triangle. That is basically setting up in these some of these housing stocks right now too, and that is that you're waiting for these things to break through to the upside, and on the next break of the upside would probably be a good time to short these things. This thing is going to be down to this 1527, but we saw a little bounce out of here. But an asymmetrical triangle, just think about lower highs and higher lows. until it gets into a very narrow trading range. And then normally you're going to break out one way. About 75% of the time, that one way, once you get through a few of these lower highs and higher lows, ends up being the wrong way, a head fake. And a good way, you can either go long or short these things. But a lot of these things are basically coming in to a very narrow trading range after being in a rather large one. My guess is that this thing is going to break out to the top. Maybe it takes to Christmas to do it, but the other side of that trade is going to be sweet, probably short above 1929 on that one. DKS, this one had a lot of action, and the downside on this one, not too bad, actually. We got a lot of these stocks beating along the lows in the retail sector. This one certainly needed to have volume the other day, and yesterday it had 1.8 million shares. When we compare it to the other ones, this is what makes me think we're probably going to have some kind of retail rally late in this year, is these stocks, even with the horrible market, are not really rolling over that much farther. The May 28th low was the huge gap down with 8.5 million shares to 42.33. We got down and pierced it once again on August 8th, and you didn't get a lot of volume, actually half. Thing rallied once more up. Now you've got a high volume high from September 12th that went against the July 3rd high with 4 times the volume. So you got a good chance this thing comes back and tests that September 12th high. We've also come back down and tested that May 28th one more time, like I said in the last couple of days, once with 1.8 million shares and the next day with a little less than 1.8 million shares. Now the bounce today, not going to be a lot of volume. So I'm going to say that a lot of these stocks are going to probably slowly melt back up. And my guess is that you're going to get back up to that $47 level. And it may, like I said, it may take 2 months for these stocks to get back up there and fill a lot of these gap downs. But my guess is you're going to get up into that area. There's going to be absolutely no volume, especially late in the year around Christmas time. We're going to come back probably with both barrels blazing and be short at the beginning of the year. But you're going to have to find stocks with very, very good fundamentals and probably light volume like we're looking at Earthlink here to find it. Anyway, I will be back in the 4 o'clock hour with the Tom O'Brien Show, and I'll see you then, and we'll be talking technology. See you then. Remember to sell, cover, or move your puts out when you can, not when you have to. See you Monday, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.